Good morning. N26's global expansion is exponential, and we want to help them to continue on this track. We have been asked to analyze different country attractiveness. Our only goal is to determine whether N26 is going to stand out of the crowd and why they are going to do so, based on the possible market expansion. Our conclusion will result from a rigorous analytical comparison. The Economic Freedom Index showed that Morocco is world ranked 78 and is considered to be moderately free. It distinguished itself from the other countries of Africa economically. Moreover, according to the 2019 Global Retail Development Index, Morocco remains one of the most attractive markets in the North Africa as well. GDP growth has been solid, but from a political point of view, there is a certain lack of government integrity despite the fact that they are fighting corruption intensely. Moreover, the judicial system needs to be more reliable and transparent. A good point is that Morocco is considered as a low currency risk country. Concerning workforce and salaries, the average salary is low at 5,188 dirham per month, reports the Social Moroccan Security Fund, and N26 could benefit from it in saving costs. However, there is a need to address rigidities in the labor market to improve productivity in the country. Another important point is the culture of the country. Morocco is a collectivist country with a very high power distance and high uncertainty avoidance, which differ a lot to a European country. The culture is also driven by Islamic tradition. To avoid conflict, it asks knowledge about religion and ethical norms, which represent a real challenge. However, Morocco has a partnership particularly extended and in-depth with the European Union, which is an advantage for a successful integration in Morocco. Moroccan taxes are applied territorially. Foreign companies are liable at the same rate as local companies. The standard rate for banks and financial institutions is 10%, which is low compared to European countries. There is no online service banking only existing in Morocco, but only 57% of the population use internet more than 4 hours per day, and among them, 42% are students. After our analysis, we think that it will be difficult and not profitable for N26 to implement in Morocco. I let now Theo talk about the United Arab Emirates.
Thank you, Caroline. We believe that United Arab Emirates, also called UAE, is full of potential for N26 and is a market where sustainable growth is possible. So let's analyze how attractive their market is. According to the 2019 Global Retail Development Index, UAE remains one of the most attractive markets in the Middle East, alongside with Saudi Arabia. Reason being, its low economic and political risk, favorable business regulation, and absence of limitation on repatriation of profits. Economic growth is expected to increase to about 3.4% annually till 2022. Government initiatives are aimed at supporting innovation and utilization of the latest technology, adding to UAE's competitiveness. With citizens enjoying a high median salary of 14,400 dirhams per month, almost 3,800 Swiss francs, N26 needs a good reason to pay for such wages. But no worries, UAE's large and highly skilled workforce is here to compensate. Disappointingly, UAE is close to be the ideal market, but the taxable income on foreign banks is subject to tax of 20%, which is not the case of local banks and most corporations. Cultural adaptation and customization is recommended as UAE's culture is driven by Islamic tradition. Indeed, compared to most European countries, UAE scores higher in power distance and lower on individualism. Now, let's look into the company ability to compete in the country. N26 direct competitors such as Monzo, Revolut, and Nubank are not operating in the UAE market as of yet, giving them a competitive advantage. Finally, e-commerce growth has averaged 30% over the past few years, a clear opportunity for N26 fully online business model. We would recommend N26 to rely on its static advantages, meaning relying on the online banking services they already offer in other countries. Lastly, UAE's market seems to respond to all portfolio consideration, from wealthy potential client to a low-risk country with no competitor, making it possible in the more longer term to expand in the Middle East. Now, let's dig into what Mexico's market has to offer to N26. I let the floor to Alexandre.
Thank you, Theo. So, to begin with, Mexico has a population of 128 million inhabitants and has the 11th largest economy in the world. The GDP growth is high, approximately 2% in 2019, and all those criteria make the Mexican market very attractive to N26. But that's not all. UNSTAD has estimated that Mexico is the 10th largest foreign direct investment in the world. With a thriving economy, great geographical location, labor force, and an increasing growth rate, it is now the perfect time to begin doing business in Mexico. But what are the competitive advantages by delocalizing the firm in Mexico? Firstly, N26 direct competitors in online banking such as Monzo, Revolut are not operating in Mexico. N26 would be the first online bank to operate them, giving them a strong competitive advantage to gain market share. Secondly, the cost of infrastructure and development would be less expensive. But what are the challenges for the firm? Compared to most European countries, Mexico is much more collectivist and relations at work between collaborators are more personal. Then, adapting to the country's culture is a crucial challenge for the firm. N26 will also face other types of challenges. Mexico is a country where the currency is used extensively for transactions. We can therefore wonder if an online payment will be automated by everyone and whether the company will be able to make its offer to a limited number of people or not. The objective of N26 is to delocalize the firm in Mexico is the diversification of risk. As the company is going to be present in multiple markets, it would cover the company's risk as they rely on their static advantages. Now, let's look into the situation of a country a little bit more up. I'm going to let Edith talk about that.
Thank you, Alexandre. The Maple Leaf country counts about 38 million people in 2020. The capital is Ottawa, but the biggest city and economic capital is Toronto. Canada is a constitutional monarchy, but the executive powers belong to the prime ministers. Canada has a market economy and the 10th richest country in the world, with more than 1,700 billion of GDP, and the Canadian dollar is the 10th safest currency in the world. Canada has a small unemployment rate, which is a good indicator of the country's economies. The legal system is based around British common law tradition, whereas Quebec is the only province with a civil code, based on the French Code Napoleon. In low-context cultures such as Canada, communication is usually taken at face value, without much reliance on a spoken context. So, N26 will not have difficulties to get the message across. In Hofstede model, with a score of 48, Canadian culture is more uncertainty accepting. This is indicative of the easy acceptance of new ideas, innovative products, and a willingness to try something new or different. So, it's a good point for N26. While this description applies to the Canadian culture overall, there are a lot of differences between Anglophone and Francophone Canadians. The French one can be more formal, hierarchical, and more emotionally expressive, whereas the English-speaking Canadian are closer to American cultures with food and TV shows. 5 firms dominate the Canadian banking industry and are among the largest in the world, as Royal Bank of Canada or Toronto Dominion Banks. Historically, the Canadian banking system favored a limited quantity of banks and branches. Concerning online banking, the major companies are Tangerine, National Bank of Canada, and finally the arrival of the major competitor Revolut in 2019. Regarding tax rate, taxes are similar for domestic and foreign companies in Canada, and laws were created to avoid double taxation. But tax differ between provinces. Toronto could be a possible headquarters of N26 in America. Toronto is the fourth city in America in terms of technology, with plenty of big tech firms as Google and Netflix. Salary and rents are lower than American cities, and the cities has access to American connection. Now, let's look into the company ability to compete in this country. The market seems to be saturated. Nonetheless, the most prevalent trend today in the Canadian banking industry is a shift to digital, specifically mobile and online banking. Therefore, N26 could have an advantage thanks to their experience to attract these new customers. Moreover, Canadian market responds to many portfolio considerations, from wealthy potential clients to a low-risk country with great tolerance. However, wages remain high, and that's an issue that India doesn't have. I will let Florian talk about it.
Thank you, Eddie. With 1.3 million inhabitants, the Republic of India is the second most populous country in the world. It's also second in the 2019 Global Retail Development Index, thanks to the size of its market, but also to the strong rise of an educated middle class. However, according to Oxfam, it is also one of the most unequal countries in the world. In the last decades, it has become a fast-growing economy, building its strength on education and information technologies. GDP is expected to grow 5.8% in 2021. However, wealth is very concentrated, as 78% of the population has wealth below $10,000. But one should contrast it with the size of the population. Indeed, 15.6 million people have wealth over $100,000. And it is worth mentioning that 25% of the population earns more than $12,500 annually. It represents the middle class, which amounts to 300 million people. In addition, India's saving rate is a top ranker among emerging economies, with an average of 30% of the GDP. Even though rural India has bad coverage, there are over 560 million internet users in India. Thanks to government investment and the population that is getting younger and younger, this figure is expected to grow dramatically in the next years. Regarding banking, it is pretty new for most Indians, as in 2014, only 53% of them had a bank account. But together with the world's largest national biometric identity program and high mobile phone penetration, the government is putting a lot of efforts to foster bank accounts openings. For example, social welfare is now paid directly to bank accounts. And today, 80% of Indians have a bank account. N26 will need cultural adaptation, as India's culture is driven by religion, castes, and strong separation between men and women. Compared to most European countries, India has a higher power distance and lower individualism. The Indian market has some disadvantages. People are still relying a lot on cash transaction, and they are pretty new to bank account usage. Taxation is also higher for foreign banks, 40% against 35% for locals. Now, let's see if N26 has the ability to compete in India. The market does not seem to be saturated. There's no such 100% online bank in India. N26 would be the first to enter this market. The government has recently created so-called regulatory sandboxes to test new digitized products or services. N26 should benefit from this new environment where rules are being tested. We would recommend N26 to rely on its static advantages, meaning relying on the online banking services. However, it should adapt to Indian market needs, such as microcredits. Lastly, India seems to respond to all portfolio consideration. It's an emerging market with characteristics different from other countries where N26 operates already. On top of that, beyond the attractiveness of its market, this country is of a strategic importance, as it's the best cost-to-quality compromise in terms of innovation and technology. It would help N26 cut its operational costs. To make our final decision of expansion, we built a table to compare each country. We ended up choosing India. It outclasses the other countries with the potential size of its market, the lack of competition, and the possibility to use its skilled and affordable workforce to cut operational costs globally.